Hey everybody, it's Pete Renzulli. Welcome to Stock Trading. Today we're going to answer the big question on everybody's mind after the stock market rallied ridiculously strong yesterday. Has the stock market bottomed? How do you know if it's bottomed? What should you be looking for if it bottomed? And more importantly, how to trade it. That's the one thing. We've been spending a lot of time on what you notice versus how you actually trade it. Sometimes it's not on the same page where you know what to do, but you're not actually doing it. So getting back to the market bottoming, classic accumulation, which goes back all the way back to when the stock market started, is you need a big reversal day on heavy volume and a good percentage gain, and it has to close near the high. We had all of those elements yesterday. So yes, yesterday was an accumulation day, but now we need some follow through, and it looks like we're going to get it based on the financials. The financials are actually reporting this morning. We're going to hop over to the financials. We're going to talk about something that we haven't spoken about in a while, which is the Ukraine and what's going on over there, and whether or not there's a opportunity to be buying one stock in particular that has had some really good volume and price action recently. And we're going to take a look at last night's coaching session because we actually jumped on a lot of stuff last night that was very, very actionable. And I want to share that with you today. Our boot camp starts next Monday. If you'd like to join us and trade with me for 2 weeks, make sure you click that link below the video. I'd love to see you on the other side. Just incredible volatility right now. Probably the number one lesson from last night that I want to walk you through is the subtle difference in how people think and what they do that gets them profitable. That's a big thing we're going to talk about, and we're going to show you exactly what that means. Yesterday's chart of the S&P 500 is the classic, perfect view of what I want to explain to you about digging yourself out of a hole versus getting profitable. It's not hard to make money when it's obvious. It's not throwing it away when you're bored is the big problem for a lot of people. We're going to talk about yesterday's CPI number. Has the number changed everything that's going on in the market? Absolutely not. It was still a bad number. The only big thing that we could talk about is the fact that it's actually decreasing a little bit. So whether or not it's peaked, that's going to be something you're going to read a lot over the weekend. Big thing we're going to talk about here today as well is sector rotation. Hopefully you've been taking advantage of the one group that we've been kind of pounding on the table over the last week and a half. We're also going to talk about something very important, which is how on Monday, go back and watch the video, how on Monday, I'll actually post the link over here somewhere, how on Monday we actually called the bottom in the market on Monday for what happened yesterday, and almost to the exact dollar. That's pretty exciting, and I'm going to show you how to do that today. We got a bunch of stuff to talk about today, so stick around. I'll be back in just 1 second. I'll be right back. Okay, so thank you so much, everybody. We're actually going to start out with the very first thing that I want to talk about, which is what is the secret to getting profitable when you're trading, okay? What is the secret to being profitable reliably month after month after month? And it really comes down to one thing. And that's it. Out of everything you could possibly be looking at, it only comes down to one thing. Are you actually trading your edge, or are you trading anything that moves because you want action, because you want to be involved in the market? Traders who know what their edge are, and we talk about this all the time, you're no longer lost because you know exactly what you're looking for. Thursday and Friday's price action were absolutely perfect examples and a perfect visual example of if there's nothing to do, which actually, I'm sorry, Wednesday and Thursday. Wednesday, there was nothing to do. We spent a lot of time on saying, dial it back, be patient, dial it back, be patient. You're not going to dig yourself a hole, because if volatility increases and there's something to do, you are now going to go from here to here and be profitable, as opposed to digging yourself a hole, have really good price action, and you just get back to here. This is a massive difference. When you spend time preserving precious capital in tough moments when it's less obvious, when we get a day like yesterday and maybe even some follow through today, you are now netting profits as opposed to just digging yourself out and wondering, why can't I get profitable? Because I know everything. I know the charts. I know the signals. I know the everything, but I can't get profitable. That's why. And the secret, again, I keep using the word secret, but it's a secret hidden in plain sight, is you're not actually paying attention to whether or not you are taking those garbage trades that you know you shouldn't be taking in the first place, the mediocre trades, the trades that don't have good risk reward, the trades that don't have a real edge. You're taking them, you block them out of your head because you think, they're not a big deal, I'll take a small loss. But a bunch of those add up, and then a couple of good trading opportunities come out, and you're just getting back to zero. So you need to catch yourself in the moment Stop trading when there's no edge and only put money in harm's way when the odds of your profit target being hit versus your stop loss are stacked in your favor. That's a big part of trading. All right. So we're actually going to hop on over. I want to show you the visual first, and then we're going to hop into some of the ideas. We're going to give you a lot of ideas for today, specifically one stock that's right at a breakout level that I like. It's got some pretty good room to go. One stock on the short side of the market today that I like. I'm also going to walk you through how we called last Monday. So we're actually going to start out with the market. This is actually the visual that I want everybody to have in their mind. This super important. So we can see here on Wednesday, the market chopping back and forth. Now you need some sort of system, some sort of process that tells you whether or not something's going on. So if we take a look at this price action from Wednesday, and matter of fact, look at Tuesday compared to Wednesday, another good visual example. So if you are trading on Wednesday and you're recognizing the type of price action that's going on, and look, I don't care if it's day trading or swing trading, because we could do the same exact thing on a daily chart using this stock right here and looking at the same thing, because this stock has been stuck in a box for the better part of a week and a half, actually probably about 2 months as well. So it doesn't matter if it's day trade or swing trade, but I'm going to use the SPY as an example, and we're going to drop down to the shorter time frames because I want you to visualize this. When you are looking at an opportunity like this, where on Wednesday, the market was just chopping back and forth. We were waiting for CPI data, PPI data. We were waiting for the FOMC minutes and whether or not the FOMC minutes were going to make the market rocket. Did they come back and change their opinion? The answer was no. But here's the big thing. And I'm actually going to take you into yesterday's coaching call because we had a bunch of questions from yesterday's coaching call. You have to ask yourself all the time, what am I looking for, right? If this happens, then I plan to take action, right? Because if this happens means that's a part of your edge, and you know that you're going to trade with conviction and likely going to see something move in your favor. But here's the deep part of it, and this is what happened on Wednesday. I was pounding on the table on Wednesday saying, nothing's going on, preserve your capital. Nothing's going on, preserve your capital. But here's the thing. A big part of what we discussed all day on Wednesday was, this is interesting. The PPI numbers were not good. The Fed minutes reiterated the fact that they plan to continue raising. So 2 data points came out that were not good. You would have thought bearish, right? If this data comes out, then we should go down, right? But it didn't. So you got to notice those things. So if what I'm expecting to have happen does not happen, again, I'm literally physically doing it where I kind of sat up in the seat and I said, those are things we have to notice. So Wednesday, the market did absolutely nothing. And I kept talking everybody through it in the community. And I said, look, something is going on here where what should have happened didn't. We have to pay attention to that. Now we're going to shift over to Thursday. If you preserve capital on Wednesday, Thursday, no matter how it ended up unfolding, it was a very good situation to say, now we didn't throw money away yesterday. If we get volatility today, if price action is moving today, we're going to get profitable for the week, maybe even the month, depending on how you're trading right now, instead of just saying we threw money away yesterday because we were bored. And this chart, I'm telling you, you want to print this chart out. It is the perfect visualization of nothing, but you traded anyway, dug yourself a hole, and then the next day you're actually getting profitable, but you're only getting back. And I want you to print this out. It's really that powerful, okay? So if we take a look at this from yesterday, this is what I'm talking about. So if you could visualize during this price action, again, it doesn't matter if you're day trading or swing trading. Imagine this price action and you're trading and you're trading and you're trading and you dig yourself a hole. And now you're starting all the way down here because you dug yourself a hole. You didn't recognize your edge. Maybe you don't even have an edge, but you traded anyway. And now the market offers this amazing, amazing opportunity, and you're trading and you're making money because it's obvious, right? Oh my gosh, let's step up, let's step up, let's step up, let's step up. All of this profit is just earned by you, but unfortunately, you overtraded because you didn't recognize it, and now you're getting back to break even. So all of this profit was you making money back while you were bored. So instead of you earning yesterday, and maybe even for the week, all of this, you only earned this little piece here. And you can see it got a little choppier in the afternoon. So again, I don't care if you're trading part-time. I don't care if you're trading full-time. If you hired yourself as a money manager, which you did, you have to know what your edge is. When you know what your edge is, it's up to you to do nothing if your edge is not there. That is such a deep secret that everybody knows, but very few people take advantage of. People mostly want to trade for action. You should not be trading for action. Let me ask you a question right now. If I told you you were going to make 10 trades this month, but only 3 of them were going to bring you $5,000, would you care if it was 10 trades or 30 trades or which 3 made money? Nobody cares. You care about the fact that your account went up. That's what we should be focusing on. So that's the first big lesson, okay? Not digging yourself out of a hole requires you know what you're looking for. Now we're going to shift over into how we called the stock market bottom yesterday on Monday. And it's something that we teach you every day. So you can go back to the video. Like I said, I'll post the video, but I'm going to show you our newsletter that we put out. I'll be able to give everybody a sample of this. So you can see we actually map out the market every single day. And this is the research that I give our community every day. But I want to go to Monday and specifically talk about what happened on Monday and what we were looking for. So you can see the breakdown here. We were watching the S&P 500 right around that 360 level. If we go back out to the daily chart, this was the level that kept coming in and price just could not crack it, right around this 360 level. So as we're watching this 360 level, we're starting to map out. Remember, the single biggest thing that I hope that you take away from what we do, and if you're watching these videos every day, which we teach this every single day, if the market is overwhelming you right now, if the stock market is starting to drive you crazy, or if it is driving you crazy for 2022, the single biggest thing that will shatter every belief that you have about the market is if you know what you're looking for, you're no longer lost, because then you only spend your time looking for that. Everything else vanishes because that's the only thing you're looking for. So one of the things that we've been teaching you is average true move. Doesn't matter if it's the market. It doesn't matter if it's your stock. All stocks have an average true move. Institutions work positions. They buy or sell. They create this buying pressure and then they step off the gas. They create this buying pressure and then they step off the gas. They do that in consistent, repeatable, reliable movements. Why? Right? Why do they stop? Because if they're just constantly pushing it up, they're going to be pushing it up on themselves and they want to get the best price. Also, they want to know, is anybody else buying this with me, or am I the only person buying it? They step on the gas, step off. If it comes back a little bit, does it pull back? Do they hold the bid, right? That's what average true move is. So it's your job to notice in whatever stocks you're trading, which, by the way, focus is a big deal in trading. You don't need a gigantic list. You need stocks that you make money in reliably. So you need to go look at your charts over the last 3 months, the last 6 months, in the direction that you are trading. Are you measuring a rally or are you measuring a decline? Recently, we're measuring a decline, right? So on Monday, and let's just go back to this. I just want to show you exactly what we're talking about. On Monday, we gave a breakdown. 3 major indices took a beating on Friday, which was the previous Friday. But here's the thing. From Monday, I'm looking for a lower opening to take out 360. So that's the big level that we've been watching. Let me actually make that a little bit bigger for you so you can see it. Looking for it to take out 360 with the next support in the SPY of near 350, which is the average true move of roughly 30 points. So let's first take a look at the stock, and then we're going to the market and take a look at that. So we're essentially measuring the move from here, which was 380, and from there we were looking at 350, which is roughly right in this area over here. So we came within $1. Now, the biggest thing that I want to get across to everybody, and I really hope that you get this from our daily videos, but more importantly, you're taking the information and the lessons that we're giving you and you're actually applying them. If we're doing a good job, please do me a favor, make sure you hit that subscribe button because it lets me know these are the kind of commentary and lessons that you like. When we're looking at the market and specifically looking at bearish moves right now in the S&P 500 and specifically the SPY ETF, the average true move in a bearish move in the S&P 500 is 30 to 35 points. So why is that so important? Hopefully what that's doing to you right now is it's shattering the myth that you need to predict. It's shattering the myth that you can't set targets. It's shattering the myth that you can't have the conviction to say that's where I'm expecting something to happen. So we called this on Monday. So how does that translate into what you're looking at yesterday morning when the E-mini S&P, after the CPI number came out, the market got absolutely crushed. 110 points it fell in 10 minutes. That is a gargantuan move. Now you could let's actually take a look at that so that's actually in the video, because I want everybody to be able to come back to these lessons and look at them again. So yesterday morning was right here. So I'm going to bring this over. This is where we were yesterday morning from here to here after the CPI number. Now you might be like, oh my gosh, we're getting hammered. It's time for me to short sell. I have to hop on board. I got to get out of my other positions, right? No. When you are prepared, remember the quote, if you know what you're looking for, you're no longer lost. So while the market's getting demolished like that, pre-market, 8:30 yesterday morning, we were sitting back and saying, look, 350 in the SPY, 3,500 in the futures is the average true move. No matter how fast we got there, whether it got there in 10 days or 10 minutes, it doesn't matter. That's the normal move. Now, can it go a little bit further than that? Of course. That's why it's called average true move. Same thing on day trading. You have average true range, what the stock normally does on a one-day basis, which, by the way, if you're day trading stocks, that's something you need to know, your average true range of the stock that you're day trading, because if a stock normally moves $3 and you're buying it somewhere near the beginning of the day and it's still got $2.80, you got some profit potential. But if it's later in the afternoon and it's already gone $2.60, a lot of the profit potential is already gone. So on average, that's not a good trade at that point unless there's something else going on. But here's the magic that I want to talk to you about from yesterday. So if we go back to the charts and we take a look and we map out where we pushed down to and we bottomed almost to the penny at that 350 level, almost to the penny. Now, again, this is not armchair quarterbacking. The video's out there. We talked about this on Monday. So how do you translate this into your own personal trading? This is really the biggest thing. The single biggest challenge that we have for new members that come into our boot camp is I know everything about trading, but my timing is off. Every single time I put a trade on, moves in my favor for one day, next 3 days it moves against me, I get stopped out, and then it does exactly what I thought, and then I'm pissed off that it did what I wanted. I took a loss, I should have made money, and now I hate trading, right? That doesn't have to be. Average true move is also going to tell you the optimal entry. The optimal entry is you noticing before you hit that buy button, where are we in what this stock normally does? You start to use that in your trading, everything changes. Now, you still need to set up good ideas before that. You still need to know order flow. You need to understand order flow stacking. You need to understand tape reading, which kind of builds that argument for the likelihood of it moving in your direction. Remember, you don't want to hit buy until you feel there's a high likelihood of it moving in your favor, because that's why we choose to accept risk, right? We only choose to accept risk because there's a good chance that it's going to move in our favor. That's the only reason to accept risk. Remember, lowering share size doesn't make a trade better. It just means that you're lowering your initial profile. So, and I'm going to say something that's kind of weird, but you want to lose money on your best ideas. Those nagging ideas that maybe it'll work out, maybe I could, those aren't great ideas. Risk money on your best ideas. And if you don't make money on your best idea, that's still okay, because the odds are in your favor. Remember, odds means most of the time. It does not mean all of the time. That's very important, especially with stock trading. Okay. So now we're going to hop on over. We're going to take a look at the ideas from yesterday. Okay. So working our way down into the week, and we're actually going to go into Thursday. We're going to map out how we were looking at things yesterday. So this was Thursday, right? This is the big thing. Personal activity has been pretty light, preserving capital until I get better ideas that I can find, right? Very, very big thing. We're talking about being patient, right? So heading into the day, this is the thing about yesterday. We had a lot of people yesterday asking about, what did I miss? Why couldn't I see it? And all that stuff. And yeah, actually, Franz, that's true. We got a lot more news going on right now, right? UK cutting back. That was a big reason as well. Should you have seen that massive rally yesterday with the stock market, massive rally yesterday? Should you have seen it? Could you have planned for it? What could you have done differently? First of all, the 350 level was the level. So you had to know that if that's where it goes down to, let's say this is the profit potential and the market went all the way down there, or your stocks went all the way down there, in that moment, pre-market, there's not much left on the trade. Now, does that mean yesterday should have been an aggressive buying opportunity? Well, it was definitely a buying opportunity if you understand tape reading. And I just can't even tell you how proud I am of our community yesterday. Just such a professional job all day long while the market was rallying in a bearish tape yesterday saying, if this happens, then we plan to do this. If this happens, then we plan to do this. It was just absolutely amazing. I was so proud of everybody yesterday. But now we're going to translate that into today. We talked at the beginning of today's call about yesterday being an accumulation day. The S&P 500 did double its normal volume. So yesterday was the first sign of accumulation, but nothing has changed. So we need to keep that in mind right now as we're looking at the market and the big picture. So why did the stock market rally yesterday? Everybody's saying it was a technical rally, and that's actually what we just talked about, right? So today we have JP Morgan and other bank earnings coming out. So now we're building the argument. So think about what we're doing right now, whether you do your game planning the night before or whether you're doing it when the market opens. Hopefully you do it the night before because you don't want to be in a rush to do it the next day. Yesterday we had that massive short squeeze, and make no mistake about it, it was a short squeeze. Profit potential was gone after that big move at 8:30. We moved down to the average true move. All of that profit potential was gone. At that point, what choice do traders have? They're getting out of short positions, booking profits. Traders like us who are reading the tape are now saying it stopped going down. Buyers are coming in. Volume is heavy. Maybe we could take advantage of a short-term move during this move to the upside. I'm going to be perfectly honest with you. Yesterday morning, I had two game plans. Number one was if the market traded lower, I was continuing to look for shorts. But because all of this profit potential when the market opened yesterday was used up, this is the game plan that we had. If the market traded lower, it would be less position size because most of that profit potential was gone, but we could take advantage of what we call a bearish echo. So now think about what I'm doing. You want to watch this part of the video more than once. I am literally preparing what I'm going to do before the market opens. If this happens, then I plan to do this. If this happens, then I plan to do this. Remember, trading is that easy when you have a structure for what you plan to do. It's a lot less stressful. But here's the play that I had yesterday afternoon. I want to be super clear about this. The better trade yesterday was in the direction of the selling pressure. But because the profit potential was already mostly used up, the better short sale yesterday, if you understand that side of the market, was on a rally. So we were actually setting up two trades yesterday. Short-term trades for cash flow because of the pre-market volatility. And if the market had a big rally yesterday, we were then looking for spots to put on a short sale again. We did put on one short sale. It did not follow through. So we took a small loss and then enjoyed the rest of that ride to the day yesterday. Now, here's the big thing that I want to get across to everybody, and I really hope this is something you internalize and use every single day in your trading. One of the biggest things that we talk about, and hopefully I impart to everybody, in case you don't know, I had two trading firms in New York City, so I've had this conversation 1,000 times. If you hate trading losses, right? First of all, let's say nobody likes to lose money. I'm going to separate trading losses from losing money, okay? Trading losses are a business expense to run a trading business. Hating trading losses is a mental thing. If you understand that trading losses are a business expense, it becomes a lot easier to accept the loss and just get out because you just paid the bill to run your trading business. So what I just said before, I really would love for you to rewind that, or I'll just say it again right now. I had an idea that was high probability in the direction of all of the selling pressure. Only if it rallied, then I would put that short sale on looking for another move down. I put the trade on. It did not follow through. I took the loss and then enjoyed the ride higher again when the buying pressure just would not let up. Please take that lesson and run with it. Trading losses are a part of what we do. If you do a good job and you flawlessly get out of your losing trades, then the only thing left for you to learn how to do to become consistently profitable month after month after month is to understand the situations When you have order flow stacked, you're near the optimal entry, and you need to make more when you have good trades. Right now, if you don't have a track record, losing trades, they're a punch in the gut. You hate them. They turn your stomach upside down, right? Well, I'm going to give you a little secret. Once you understand developing an edge, which our edge is order flow and tape reading, right? Once you understand that and you give yourself a chance to learn by cutting your profits where they're supposed to be cut, you're now giving yourself valuable trading experience, which means now you're trading real money to learn how to make money. Not paper trading, not simulated trading. Get that garbage out of your head. You don't learn how to trade simulated trading. Let's just get that clear, right? You need to trade real money. I don't care if it's 50 shares, all right? But here's the big thing that I want to get across. As you're trading, you've got your edge. If you want my edge, join us in the boot camp next week. You get everything. You get 2 weeks of this with me. You have your edge. You have your trading expenses, which are your losses, keeping them reasonable while you're learning. But here's the thing. Your main job while you are trading is to understand the conditions when bigger profits are on the table. And here's the key, and you want to write this down. The same discipline you have for taking a stop loss, you need to learn how to have that same discipline for holding a trailing stop loss on a winning trade. Now, raise your hand if you've done this, because I did this early in my career as well. We're like, oh my gosh, I'm up $1,000. I better go take it before it vanishes. And we take the $1,000, and all of a sudden this thing is rocketing higher. And when you turn a $4,000 trade into $1,000. Write that down. I need to work on, I need to gain, I need to practice, whatever you want. I need to gain the discipline on profitable trades to make more. When you understand what great trades look like, when you understand what crappy trades look like, you now understand how to trade both of those. Crappy trades you stay away from. Good trades, you put all of them on. Good trades that don't work, you take your loss, you go to your next trade. Good trades that do work out, have that discipline and say, this is exactly how I'm going to hold my winning trade and stick to it. And I'm going to say something. I know I'm on video or on YouTube right now. When you learn and do that part of profitable trade management, everything changes for you in an instant. Now, all of that requires you have an edge in the first place, which is something that you believe happens most of the time to move in that direction. And then when you get to that point, I promise you, which is the promise I make to everybody in our boot camp, I promise you, eventually your biggest problem will be holding your good trades longer. And that is a heck of a problem to have. So now how do we translate all this into today's trading? Well, yesterday was an accumulation day, but in a very bearish tape. So it's day one. Accumulation days, we look for them to work themselves out over a week or 2 weeks. So maybe we dance around a little bit. Maybe we have another update based on the financial stocks reporting today, right? If we have another accumulation day where the market opens lower, reverses on heavier volume and closes near the high, now we're starting to see something interesting. Has the bear market ended? No. It's a clue. It's kind of like your alarm clock went off and said, wow, something different happened. I need to maybe reevaluate. So what are we looking for now? Now we are looking for the next average true move in the S&P 500 to set up to increase that distance in the profit potential for our next opportunity. So any trades that are buying opportunities today, which could very well be the bank stock. So JP Morgan, let's see, JP Morgan is right now up $1.40, up $1.50. Citigroup also up a little bit. Banks could be giving us the catalyst to be getting involved this morning. As far as sector rotation, just want to make sure we walk everybody through this. This is fantastic, right? So let's actually break this down. Hopefully, you're a regular viewer of the channel. You know that we've been following energy stocks for the better part of the last couple of weeks. It's a huge part of sector rotation. So if we see the sector rotation from Monday, energy at the top of the list, energy at the top of the list, energy at the top of the list. Energy number two, consumer defensive, consumer staples yesterday. That's mostly bouncing off of what Pepsi has actually been doing. Let me go back out to the daily chart with Pepsi earnings. So consumer staples and Pepsi actually had a little bit of a rally. So what are we basically saying here? Look at the top two sectors, energy and consumer defensive, for pretty much most of the week. Again, I want to go back to what we said before. When you know what you're looking for, you're not lost anymore. what I'm teaching you, and hopefully what you're learning from me and gaining conviction and gaining confidence, is you do not have to predict. But doing the homework is 80% of the work. Being prepared from knowing what you're looking for and being prepared to set up your trading platform to understand when your trading platform set up, it's going to spit out all the good ideas because you understand what to look for. You're going to put those into your watch list, and then your trading software is going to say, these 3 stocks, there could be 10 stocks in the list, but your trading software is going to say, these 3 stocks are the ones you should look at right now. So I'm actually going to move our way over into a couple of ideas for today. So I'm going to work our way down we're going into Friday, and we're going to go into stock picks. So here's the big thing. Tough call for new swings after yesterday's massive rally. Obviously, right? A lot of the average true move in the market has worked its way over. But today I'm going to be looking at Starbucks. Like, we get a lot of questions about which picks. Starbucks is pretty interesting to me right now. So if we kind of zoom on over to Starbucks, you can see clearly this would end up being what I would call a two-step trade. This is a level where sellers kept coming in and holding it down, holding it down, holding it down, but basically over 92. So we're roughly $2.50 away from 92. If we can clear the 92 level, we got minor resistance here and then a little bit more up towards this 116. So we could work a push and a pause up to this level and then there. Now, here's the big thing, and this is a question we get all the time. Well, if you like it over 92, why don't you just get it now? Why don't you get it before it gets there? Well, let me ask you a question. Why would I want to buy a stock in front of the price where sellers keep smashing it down? But if buyers can finally push it through there, there's profit potential. Prior to 92, there's this much profit potential. Above 92, there's this much profit potential. I'm not going to fight it. If it gets through there, great. I'm going to get involved. 92 is the level. But until then, sellers are still in charge of that stock. But like I said, sit up in the chair above 92 is interesting to me. So set an alert for Starbucks at 92. If it gets up there, closes above that level, that's where we look to start putting on a position, looking for it to work up to the 100 and then 116. So you have those levels mapped out right here and right here. The next idea that we're looking at today on the short side of the market is SQ below 54. So again, we're seeing it stop at this level consecutive times. So if we map this out over here, you can see 54 is a level that it just cannot get away from. It's kind of like super glue right now. So if we take that and move it out to the weekly charts, you can see that we got some resistance over here. A couple of times it stopped here. So we're basically looking at 34, 35. So if we're looking at 54 down to 34, if the stock SQ breaks below 54, 34 is the next move. Now, here's where it gets kind of fun. But what is the average true move in SQ, and how long will it take to get down to 34? So first of all, it needs to get below that level. Again, same answer as before, because that's a pretty big support level. Now let's look at the average true move in SQ and determine how many pushes it might take so we have patience before it can get down to that level, if it gets down to that level. So this is where we take a look at the bearish side of the tape, and we take a look at bearish moves in SQ. And as it's pushing down, we can basically see now right here, let's actually map that out. Right there is where it turned bearish again, right? We pushed down, rallied, and broke that level. So from this level right here, we're going to take a look at this move here, which was basically 74 down to 64. So $10 move. Then we pushed down here and we went from 66 down to 55. So SQ has normal moves of $10 when it makes a bearish move in the current market. So if we're looking for SQ to go from 54 to 34, that means that we can anticipate 2 bearish moves to the downside to get down to that $34 target. So a push down of $10 and then a pause, and then a push down of $10 and a pause. Now, here's the thing. That's the game plan. If the game plan, remember what we said at the beginning of the call, if this happens, then I know what I'm planning to do, right? If it pushes down, I expect $10. If I want to hold longer than that and not get itchy to take that profitable trade, then I'm looking for a pause and then another move down. So 54, 44, 34. If that unfolds, great. If it does not unfold, it's a business expense and I simply move to the next idea. That's how we're mapping it out today. So for today, oh, actually, one more idea I want to make sure I point out to everybody here today, which is a big one for the week. A lot of talk about aluminum bands, or at least they're trying to get aluminum bands. And Alcoa has been benefiting from this recently. And if you remember last week, we actually talked about, if we'll go small picture out to big, this is when the news first broke. We got a little bit more follow through on that yesterday, but something interesting that happened over here. And we talked about this a little bit later last week. And again, I want to talk about this in a big way. So remember, what we are looking for are the high probability trades in a particular direction. So when a stock breaks down, we're like, cool, it should continue to go in that direction, right? But what if we say to a stock, okay, if it goes down, then this is what should happen next, like we just talked about in SQ. But what if it does not happen? Then you got to sit up in your seat and you say, wow, that isn't what I expected, or what should have happened. Now I need to think about how to manage this position. So now you need to say, what don't I want to see the next day? Well, what I don't want to see after it breaks down, I don't want to see bullish action. So if we're looking at this right here, that's great for a breakdown, but then the next day bullish action, the next day bullish gap, and then a 4 or 5 day pause. That's not what we want to see for the breakdown. So now we're making adjustments. We're not guessing, we're not forecasting, we're reading the tape. Learning to put these pieces together are what will separate you from somebody who says the market doesn't work. The stock market is the most glorious place to put extra capital to work if you know what you're looking for. If you feel like you're guessing, you just don't have an edge yet. There's no reason to guess. So what I want to do now is I want to walk you over into some of the coaching call questions from this week. So hopefully, again, it's Friday. We want to spur you into the weekend to looking at some things in your own trading. So I'm going to show you Monday's coaching call topics, and you can take a screenshot. And I'm going to show you Thursday night's coaching call topics, and you can take a screenshot. So let's actually hop on over to Monday. So we're going to zoom on all the way over here, back up to Monday. And we're going to talk about Monday's coaching call topics on Tuesday. Actually, Tuesday is when they came out. Let me actually go here, which is here. So you can take a snapshot of this. So entering after a gap, that was a big part of our coaching call on Monday. Catalyst changes the expected profit potential. So think about that. That's what we're talking about with the CPI number yesterday and the profit potential that we talked about today in the SPY. We also talked about reasons we get stopped out early. So here's a big thing I want to get across to you every day as well. If you want to accelerate your learning curve, right, and just get to making money right away, stop the learn, right? First, obviously sign up for the boot camp. Our boot camp starts Monday. It's $195 for 2 weeks of this with me every day. You get my strategy, you get everything. The second way to do that, and this is what I ask people on coaching calls. I am challenging you on coaching calls. I want to help you. What is holding you back? What part of trading are you absolutely not understanding? And if you knew the answer to that, it would change everything. And what we just talked about is one big one. And we talked about this a lot on Monday night. Reasons you're getting stopped out too early. So raise your hand. We talked about this before. Raise your hand if you're getting stopped out of good trades too often. You got to ask yourself why. And I'm going to give you a little bit of a hint of what we talked about on that call. It's recognizing what position size you should have when you hit that buy button in different conditions. Think about that over the weekend, right? So you can see here, hopefully you took a snapshot of that, understanding how to make more in your winning trades. So we actually have a strategy called the profit maximizer for winning positions. Very, very important to have there. And then we're going to go down to last night's coaching call. We want to drop all the way down here, and you can take a screenshot of these guys as well. We just talked about the criteria for accumulation days. We just talked about when something should happen but doesn't. Very, very important as well. But here's probably the most important one here. Tape reading and doing it in real time. So when we're talking about tape reading and we're talking about what the market should do. Now, here's the big thing. A lot of people say tape reading is confusing, right? I want to get clear about this. You already know how to do tape reading. It's not the quotes that are going on the bottom of CNBC. Tape reading is this. Is your stock moving closer to or further away from a reference point? Like, oh my gosh, that's challenging, right? No, it's not. You already know how to read the tape. As soon as you buy a stock, you are the best tape reader in the planet on that stock because nobody knows better than you. Is it going up or down? It's moving away from that price. It's moving away from that price, moving away in a way I don't want it to, moving in a way I do, right? That's tape reading. The skill of tape reading and really leveling up your trading is to understand how to read the tape before you put the position on. So remember, the big things we do: order flow stacking and tape reading. Order flow stacking are stacking the odds of it moving. Tape reading is getting it as close as you can to, is it still valid or has it changed? I'm going to leave you with that today. Have an awesome weekend, everybody. If you want to join me in the boot camp, click that link below. All the information there. I hope to see you there. Take care now.